the theory or the reasons, I guess, for investing in real estate and kind of some of the benefits. But this presentation, part 2, is going to dive deeper, and we're actually going to share experiences between Carmelo and myself of ways that we've invested in real estate, that like pretty simple things as well, and just kind of like to show people what the opportunities are that exist out there.
And we're also going to give a different perspective with regards to how we did it. We did it in 2 different ways, so there'll be a little bit even more value with regards to there's more than one way of buying an investment property.
For sure. So here's a little legal disclaimer. So we're not tax or investment experts. This is just for entertainment purposes. Do your own due diligence. We're just sharing what we've done, our personal experience, viewpoints. It's basically, if this is all kind of like, if you're going to do any of this, it's at your own discretion. So a little bit about us. Carmelo, go ahead.
So good evening, everyone. Hi, my name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca. I've been doing mortgages for way too long, over 20 years now. But the best thing with my career is I actually started as a mortgage underwriter. And for those who don't know, mortgage underwriters, they're the person at the bank that actually reviews your application. So when I began my career, actually the first thing I learned was how the banks think when to look at an application to approve someone to get a mortgage. I worked for the big banks, worked for smaller alternative lenders. Now I'm independent. Being independent, what that means is it means I have access to a variety of different, there's banks, trust companies, just finance companies. When it comes to doing financing, there's more than the big 5. And a lot of people I talk to, they really can't name more than 6 banks in 10 seconds. So there's a lot of options out there. So I don't work and have loyalty to one bank like when I used to work for the big banks. Now I work for you, and I help everyone find a solution to get into their home.
So do you work with credit unions as well, just out of curiosity?
Yep. Duca, Meridian are the bigger 2 credit unions that people might be familiar with.
Very nice. So yeah, at Carmelo Mortgage on Instagram if you want to follow Carmelo. And so he's posts quite regularly and probably more regularly soon.
Yes. I'm not sure on social media, like posting myself, but I do get some content out there.
Okay, sounds good. So yeah, my name is Alex Vanietsky. I'm a realtor of Remax Condos Plus. I work in downtown Toronto. Before getting into real estate, I spent over a decade in Toronto's condo industry, working as the vice president of a service provider that tailored their services only to condos. I've probably been in most or all condos, at least in the downtown core, at some point, whether it's for now for a showing or in the past to tour a property or provide a quote or do a risk assessment. I've conducted over 65 of those. I've been a real estate investor since 2013. Some of this presentation you're about to watch is about that and how I got started investing in real estate back in 2013. And in 2022, I was in the top 1% of condo sales for TREB members, over 70,000 TREB realtors that we have here. And my Instagram is at alexz.realtor. If you want to check that out, it's a lot about condos, investing in real estate opportunities, both in Ontario and Alberta, and just kind of general stuff.
Yeah, and if you want to find us on socials, we just put it in the message board, so you can find it there and follow us to get some more information and reach out to us.
Sounds good. Okay, so some of the the reasons why real estate is such a solid investment. When you look at the different types of investments that you have available to you, so you have the kind of the most well known are stocks, bonds, and real estate. And real estate is basically, it's a basic human need. So as human beings, we need food, water, and shelter. Those are the 3 needs, the 3 basic needs, and that's why real estate investment has been so popular as of late, and why it's also so such a stable vehicle. There's a growing population currently in Canada, as you may have heard from various media sources.
Yeah, and real estate is also it's a physical asset. So it's something you could own for a long period of time, and then over time you can also pass it to your children, which is a great feature with real estate.
Yeah, and I heard a headline somewhere. I don't know what the exact stat is, but I think like a very significant portion, like a vast majority of the recent wealth, or people that are, millionaires, have done so through investing in real estate. Our population continues to grow, and simply put, there's only so much land to build houses on, and especially here in the Greater Toronto area, there's a lot of barriers around, building in various protected areas, and because of that, we don't have as much room to grow. We're also that's why we're experiencing a lot of vertical growth now. Most new real estate that's being built in the GTA is condos. But yeah, overall, I mean, it's a fairly low risk investment as long as you are purchasing it with the intention of holding it, letting it appreciate, paying down the mortgage, paying down the principal, and that's the investment strategy. If there are people that are more speculative and they, for example, buy with the intention of assigning an investment before it closes, and that's definitely not a great way to go about it, just because of tax implications, and it's not something that should be short term.
Exactly. And real estate is like the tortoise and the hare. Who wins the race? It's
Right.
the tortoise. It's a long-term game. It's not a get-rich-quick scheme.
Yeah. So here are some of the ways that you make money in real estate. Just property appreciation. So property prices going up because of supply and demand in the GTA. This appreciation is between 5 to 10% year over year. Also, the pay down of the principal. So either yourself or a tenant paying down your mortgage through their rent. And then also just cash flow itself. So the difference between the rent that you get and the expenses, that's referred to as cash flow. So pocketing money every month when the rent is paid.
Nothing like passive income.
Right. Exactly. So I mean, it's pretty passive. I mean, it's a little bit more. It's not totally passive. It is hands-on, and there are responsibilities to being a landlord. We have a whole different presentation that we do about that, where we talk about being a landlord and tips and recommendations. But here's what we're talking about with the GTA housing market trends. So this is where we were, I guess, 6 months ago. Maybe that's the last time we did this presentation, but you can see that long-term real estate appreciates. This is the last 24 years. It doesn't just go, there's no asset class that just goes up. There's always correlation. There's always going to be bounces. There's always going to reach a point where it says, like, we're not willing to pay more than this at this point, and then prices go down, and then they continue to go back up. So you can see that, the trajectory is up, but it's not a straight arrow.
Exactly, and that's why real estate's a long-term trend. Even recently, we had when you look at the chart, we recently had a top just about a year and a half ago, 2 years ago. But if you look at the previous, you can see the previous spike in 2018, it was a lot lower, and the people who bought at that time, maybe 3-4 months later, 6 months later, were thinking, "Oh my God, I paid too much for my house." Look at the prices. What happened since then? Everyone I've talked to, and every person I helped buy a property back in that time, I asked them the same question: "Do you wish you bought two?" And then we start laughing.
Yeah. And I mean, it's pretty much supply and demand, and then something happens. Like, so for example, here during the pandemic, when banks were just giving out basically free money, it was the COVID free money promo, people were rushing to get into real estate. Like, we had news headlines probably every week or every 2 weeks that there was new record sale prices that were reached. Oh my gosh, my battery's running low. That there was new sale prices that were reached, and sales records that were set. And then all of a sudden, the government started to increase interest rates very aggressively, and people started to kind of pull back, and there was less demand, and that impacted the price. So supply and demand is what drives the price of real estate. But you can see that now, we're back in a rebound, and actually right now, the fall of 2023, because of the higher interest rate environment that we're finding ourselves in, prices continue to decline, especially for condos. So there is actually a really good opportunity for somebody who can, stomach the higher interest rates that we're in right now to get a property, at a price that's, very similar to mid 2021 prices.
Yeah, and again, if you're doing it now, you're holding the mortgage for 25 years. So when it comes to interest rates, everyone's really focused on the fact that we're in a higher interest rate environment, but not realizing for the next 20, 25 years, it's going to come down at some point. And then it will go back up and down. It's a cycle, right? So now that the fact that interest rates may seem a little higher, the amount you pay is based on what your balance is. So if you're going to buy something a couple $100,000 less, you owe less money.
Yeah. So that's how, I mean, it's kind of like it evens out, right? Like there's basically like a time when there's a standstill where buyers are saying, okay, like this is how much mortgage I'm going to pay. I'm only willing to give this type of offer for this property because that's what it makes sense. And then there's the sellers that want to get a specific rate, a specific price for their house, a specific sale price, because maybe that's what their neighbors sold at a year ago, but that price doesn't exist anymore. So it's basically a stalemate, and then something has to give in one direction. But I think a little bit enough about that, and let's talk more about how we, purchased our own property. So here's some. Do you want to go through this, Carmel? So
there are different ways when it comes to buying investment properties, and I kind of want to share some examples. Over the past few years, with people getting into the market, a lot of people in the Greater Toronto area got into the market with condos. Because that's just like the entry point. So another way of buying an investment property is kind of like using the condo you live in, and that you want to buy something else. You can always refinance, whether it's a condo or your townhouse or your existing home, where that then becomes the rental property. So you're taking that equity out, you're using that money to put towards down payment on a new place. And a little tip and a secret, you're still allowed to buy another home with less than 20% down payment. You do not have to have 20% down payment because it's going to be a place you're living in. So you're keeping your existing home, whether it's a condo, townhouse, or semi, as the investment property, and then you can still buy a new place for less than 20% down payment.
Yeah. What about even if you have, I don't know, like your child is going to be going to university, and they're going to need housing there.
Yes. If you have someone the age of, that is, going to university, and you want to say buy in, I'm going to use Toronto because that's kind of the market I'm in, but it's applicable to a lot of other places. If you want to buy a second home, so instead of having your son or daughter stay in a dorm and pay $2,000-3,000 per month for staying in a dorm, you could buy an investment. You could buy a property as a second home with as little as 5 or 10% down payment. They're going to live there. They go to school. After 4 years, one, you didn't pay rent for them to go to school, and two, once they had done their schooling, you could then use that property as a rental property. And now, you bought a rental property without putting that 20% down payment.
I just want to jump in here for a second too, because when you're going to be paying for tuition, and this is from first experience. So from firsthand experience working with U of T students, especially in the last 2 summers. So when you're going to be living on campus, most universities only provide that for the first year. So, second, third, fourth, post-grad, if you're looking to rent a condo in downtown Toronto, how much? Okay, so about first and last month rent, right? Right, Carmelo? Like just standard deposit.
Yeah,
how much deposit do you think a university student, like what do you think is the standard in Toronto right now for a university student in the summer who's looking to rent out a property for September 1st? Let's say they want to rent a condo downtown Toronto.
Okay, I'm going to say this is a trick question because it's going to be first and last month rent.
It's not first and last month's rent. It's at least going to be 6 months, but the new standard is 1 year up front.
Say that again. So
I've helped multiple university students rent out condos in downtown Toronto because they needed for school to go to U of T or University of Metropolitan, and they had to pay the whole year up front. So if the condo is sorry?
No, continue.
So if the condo is $2,500 a month, a year up front is $30,000.
Is that because they're students?
It's because they're students. They don't have income.
Credit, the job. Oh yeah, that's right.
Even like with guarantors or co-signers. So I mean, like if you were talking about buying a property potentially as little as 5% down, I mean, there's your down payment or a big portion of it right there.
That's if you're buying, say, for $500,000, $30,000 is enough to cover down payment and closing costs.
Yeah. So anyways, I mean, so that's, yeah, basically, yeah, there's all kinds of ways to look at this, but
Yeah, there's multiple ways to look at when buying a rental property. These are just two examples, and we start kind of sharing ours now.
yeah.
How we did it.
Okay. So here's a property, a picture of a freehold townhouse. So this is I own a townhouse in this complex. This is in Barrie. Basically, in 2013, 2014, I was looking to buy an investment property, and I came across this opportunity. So this was a pre-construction townhouse. I bought it for $280,000. It's in Barrie, close to ESSA and the 400. And here's this is from my purchase agreement that I bought that. And what I did is that this property, I mean, it appreciated very significantly. So I purchased it in 2014, but it wasn't going to be closing until 2016. And by the time that it was already being handed over to me from the builder in 2016, the property value jumped up significantly. It continued to move up to the point that in 2021, during the pandemic, I was able to get a second mortgage on this property. I was able to pull out $81,000 in equity, and then I was able to use that as a down payment to purchase this property in Windsor. Go ahead, Carmelo.
No, sorry.
Yeah, to purchase this property in Windsor, which I'm going to be talking about at 8 p.m. today, because I've recently turned this into an Airbnb. But this is, I don't know, Carmelo, if you want to do you want to go deeper into this?
It's the fact that I love the fact that you bought a property, and over time it just appreciated.
Yeah.
And when what you did is you took equity out of this property to buy another property. So that second property you bought in Windsor, you really bought it with 100% financing. When you think of it.
Basically, there was no new money. And one of the key things is that I had a mortgage broker that I was working with. They helped me to get the mortgage for this property, the initial purchase in Barrie. And, I've heard about people taking out equity and using it as a down payment. I spoke to this mortgage broker a couple of times about it. I was basically just dismissed and told that this was not an option that was available to me. So what I did is I went and I found a new mortgage broker who said that, yeah, this can be done very easily. And it was pretty smooth. I mean, like, whether you're doing it this way, or I guess another way I could have done this would be like a home equity line of credit, or just waiting for my mortgage renewal. And at that point, using that equity, is that possible, Carmelo, if I was to get the mortgage renewal?
You could at renewal, you pretty much, you're a free agent. You can work with any bank. So refinancing, there's no penalties for switching banks.
Mm-hmm.
And you could find the bank that's the one going to give you, obviously make sure you give the best terms and conditions for that financing, because you want it to be flexible. These are investment properties, so you don't want to be, flexible repayments, flexible penalties. Those are the more important things to look for than just the interest rate alone.
Yeah, and I mean, like, okay, so this was purchased for $290K. So there was like land transfer tax and closing costs, but I the way that I remember it is, I'm fairly certain that the whole second mortgage basically covered my 20% down payment. It covered all my clothes. Like, like, you're right. Like, there was like nothing out of pocket. I didn't have to come up with any new money. I just had to qualify for this. And
that second mortgage, when you talk to your accountant, probably expense that interest now, because it's used to buy an investment property.
Yeah, for sure. I mean,
100% financing.
For sure. And, there's other benefits too, like, like driving to the property, like the various tax benefits that go into owning real estate. But, I mean, like, here's kind of like the way that this investment panned out, and the return that I got, right? So I purchased the property for $279,000, but I only needed, like, basically I didn't have to come up with any new money. So when I purchased my initial property in 2014, the house in Barrie, I only needed $56,000 to get that. And through that $56,000, I was able to purchase a property that has a current market value of $650,000, which, is just, it's very significant. In the peak of 2022, these townhouses were selling as high as $800,000. So my initial 20% down payment investment in that new construction townhouse in Barrie resulted in 2 rental properties. I've built about $450K in equity, so mortgage paying down and appreciation. And this is basically the power of real estate, because had I taken that same 56,000 that I used as my deposit to the builder and down payment to get that initial townhouse in Barrie, and I invested it in something like, let's say, the stock market, and let's say, something relatively safe. So if I was to invest it in some sort of ETF or mutual fund, or just like in the S&P 500, and let's say that I got a 10% annual return after the same 8 years, or sorry, after the same 7 years, my 56,000 would be worth about 109,000 today, as opposed to 450,000 and 2 investment properties where tenants will continue to pay down my mortgage, and they'll continue to appreciate just through supply and demand. So that's kind of my story.
Well done. Well done, Alex. And it just kind of shows the power of time.
Yeah.
You did it in 2014. It took, right now, okay, we're in 22. It took almost like 8-9 years. But that initial 56,000,
yeah,
you got like, you're almost like 9 times your return on investment, 900%.
Yeah, for sure. And I mean, it's also because in 2014 I got a pre-construction, right? And it was completed in 2016. I could have bought resale, and then this whole thing could have been accelerated by a couple of years. But also, even just like, for me, like when I invest in real estate, I'm looking at, like, I want to invest in a larger market. I want to have also positive cash flow was something that I was continuing to seek then. So that's why, I needed to buy that second property in Windsor, because I needed a property where the rent would cover my carrying costs.
Well done.
Thanks, Carmelo. It's your turn.
This is my example to be a little different, because when I bought my property, it's more recent. I purchased it in 2020, and I actually bought it with 2 other people. I chose not to buy it on my own because I'm definitely no expert when it comes to doing renovations, when it comes to owning properties. My expertise, I know, is in finance and in numbers, not when it comes to like trades or to doing this. So when I looked at my for me to buy investment property, I actually called 2 friends of mine that I've known since high school, for over almost 30 years now. Get along great. We decided to all get into this together as partners. So we purchased the property. It's a duplex in Barrie, and we bought it for $565,000. At that time, we all thought we were crazy. We were paying way too much for it. So when it kind of goes down to if we look at the numbers, Alex, if you don't mind sharing the next slide. I bought a duplex it's all right. I bought a duplex in Barrie. We bought it for $565,000. But again, my friends and I, we had to put 20% down payment. So we had to put a total of $113,000, which again, on my own, that is a lot of capital to use just for one investment. So I'm a little bit risk averse. So I decided to like diversify and have 2 other people partner in with me. A closing cost for that purchase was, let's call it $11,000. So the total cost, down payment, closing cost, $123,276. On my own, that was a big pill to swallow. When I have 2 other people involved, it only required $41,000 of my own money. So it cost me a lot less. And at the same time, it also reduced my risk, because again, now I'm splitting it with 2 trusted friends. So, and it's not just also the cost of buying it, but also having 2 partners with it. It's the workload. At first, I didn't know, as my first investment property, there's going to be a lot of work involved. And there is work involved. Having 2 other people with me, we split the work now. I'm an expertise of my things. I leverage my friends off some things, and there's some things we all learn together. But we're all there's more than one mind and more than one pair of hands and body when it comes to helping our tenants with the property. Because again, we got a duplex is really 2 different units in one roof.
Yeah, it's also good just like mentally to have that support and know that you can kind of share that between other people. Like I know that a big part of investing in real estate is also just like the getting over, because it is a very significant, large purchase, right? So just kind of being rational about it is sometimes challenging, right? Like it can be emotional.
Alex, I have to refinance my house. Refinancing $113,000 was scary.
Yeah.
Taking out $50,000, not so scary.
Right.
So how does the investment work? Because when we went into it, again, I'm a numbers guy. I really had to crunch the numbers. And so when we got it, the mortgage we got was 452,000. The payments were 1726 per month. We knew what property taxes were going to be 300 per month. We knew what the property insurance was going to be. And so if you buy an investment property, you definitely need a landlord rentals insurance, which is a special insurance. And then we also kind of averaged out what utilities would be. So we kind of looked at what our expenses are going to be. At that time, before we made the purchase, we knew our expenses would be about $2,510 a month. But the place already had tenants inside. So we already knew what the rental income was also going to be. So we knew the upper unit, because there's an upper and lower, was currently being rented out for $1,850. We knew the lower was being rented out for $1,400. So we knew the revenue we're receiving would be $3,250. We looked at the money we're bringing in. We looked at our expenses, and we saw every month was going to be a surplus of $740, which came out to $8,880 per year. So when, again, being a numbers guy, I kind of always like to look at the ROI, return on investment. We looked at the annual profit, 8,880. We divided by the investment of the capital the three of us had to put in, and we saw we were getting 7.2% return on the money. And at that time, there was no stocks paying, or at least no low risk stocks paying that type of dividends. They couldn't find, private mortgages or mutual funds or, ETFs, any type of investment that could give me that much cash flow on my investment.
And I mean, when you calculated this, Carmelo, as well, because I mean, okay, you invested this much, but what's appreciating is the whole value of the property.
Yeah, it's a leverage. This is kind of what's going to happen. So, our surprise, we bought in 2020 at the beginning of COVID. And then, a surprise happened. The value went up a lot faster and higher than what we expected. So in March 2021, our partners and I realized, like, hey, this value's gone up really fast. Let's refinance it, take some equity out. So it takes about 2-3 months for us from the time we thought about it to when we actually closed the refinance. And at that time, the property got appraised for $700,000. So in just a year and a bit, the market value went up by over $135,000. Nice. We got a new mortgage for $560,000, and at that time we had to pay back the old mortgage. We had to pay a penalty, which you think kind of sucks, but it's cost of doing business. Mm-hmm. We had a lawyer to close it, and once we knew we finished our refinance, we had a surplus, and the amount of equity we took out was $112,000.
So you basically paid yourself back.
That we all got $37,370 back. And what I did was I put that back on my mortgage. So the money I took out goes back in, and now I'm using the bank's money.
Yeah, I just wanted to look like what's the difference here? Like basically you guys bought this duplex $4,000 each.
Yeah. Now we have a property that's still appreciating. We have 2 tenants paying us, and it's just when it comes to buying real estate, I know I work with a lot of people, and nothing wrong with wanting to do it on your own. Myself, I have a different approach. I a little bit risk averse, and I knew I needed help, so I decided to just partner with someone.
Yeah, and I mean, also, I guess like in my scenarios too, I did have people along the way that have already done it, and they were kind of guiding me through it. So I had partnership and kind of surrounding yourself with the right people and actually getting advice from, everybody has an opinion, but it's like, I remember even like when I bought my property, I was told like, oh, it's so risky. I have no idea why now that I reflect back on it, but like also like who is the person that's kind of giving you this opinion, and why do they have that opinion? Are they doing what you're looking to do, or is it just somebody with an opinion? Yeah,
don't listen to the naysayers, because again, it's being around the right team. Yeah. Alex, again, like you had people in your network that were investing and helped you with this.
Yeah, exactly, and kind of inspired me to do it, and also, I guess kind of part of what we're trying to do with this webinar is just to show people that it's like, look, it's not that scary.
Yeah, and again, there's more ways to buy investment property.
Yeah.
We showed examples at the beginning. Alex showed his. I have mine. I'm sure there's people here that may have investment properties and they might have done it a little differently themselves.
Yeah. We're not saying that our way is the right way, just like our way is a way that leads to a successful finish, at least for us. So that's, kind of what that is. So, we want to open it up to the floor. If anybody has any questions for Carmelo or myself. Also, Carmelo, do you want to just share our social media in the chat and the Calendly link if anybody wants to book a 15-minute call with Carmelo and I, or if you have a question that you want to ask outside of the webinar, feel free to either reach out to us on social media or comment below, or book that call on Calendly.
And at the same time, if anyone wants to call just with regards to like input, feedback, any general questions, we're free to help and guide you, right? So I just added the Calendly link. If you would like to, for a 15-minute call, you're around people that are telling you or listening to the media that's always talking about housing market's going down, down, down. Well, it's not true. Look, that last chart you showed, Alex, shows like the uptick already started. So
it's definitely not true, but that's just kind of what it is. We can't control the media. So yeah, if anybody has any questions, feel free to unmute yourself or comment. Okay, so Julia, can you explain more about refinancing method?
Okay, so I'll do that, Julia. I'll try to keep it as simplest as possible. If you do currently own a home, you can look into the options of refinancing it, which means you could take some equity out. The amount of equity you're going to take out is to be based on today's market value. And the bank will be able to lend up to 80% of today's market value. So let's just say, for example, the value is $1 million. And any new bank could increase your mortgage up to say 800,000, which is 80%. If your existing mortgage balance is only 700, that gives you about $100,000 of equity you could take out to use to buy a property. I try to make it as simple as possible in less than 60 seconds. I hope that makes sense.
Amazing.
Perfect. Thank you. Good question.
Well explained, Carmelo. There you go. There's a social media post for you right there.
I'm afraid to put my face out there too much on social media.
Okay.
I like these webinars. I could go on these webinars, no problems, but to throw it on Instagram or LinkedIn,
yeah,
I'll get there.
Okay. Okay. So who else has questions? That was a great question by Julia. But yeah, if anybody else has questions, feel free to unmute yourself or post it in the chat. Refinancing versus HELOC from David.
Home line. Really, again, short term, long term. Sure, I'm a really big believer, and I've seen it too many times. Lines of credits are more for short term, and having the mortgage amortized for long term investments. So I'm more of the fan of with regards to the mortgage component. You're buying real estate, you're buying long term. So
what's the difference between HELOC and home line? That's the same thing, isn't it?
Yeah, home equity line of credit is HELOC. Yeah. HELOC is the acronym.
Yeah.
So refinancing, again, now there are options maybe, Dave, to kind of to add a little bit more value depending on who your existing bank is with. There may be options to increase your mortgage without necessarily breaking that mortgage and losing that low fixed rate you may have gotten in the last few years. So to learn that, it's going to be more specific. We could talk offline. But there are ways with regards to increasing your mortgage, not necessarily having to break or depend on who your mortgage is with.
What about interest rates? Like if you're refinancing, is that the same as getting a mortgage?
Yes, you're increasing your mortgage.
Right. And so a home line, I know home lines have changed big time over the last few months in terms of, it used to be something like 2% or something like on a home line, but it's something like way higher than that. So I guess refinancing would be a cheaper option to, because you're going to be paying interest, right, on the money you're taking out. So
correct. So another reason why, David, I say like using the mortgage, because line of credits are great. The prime rate is 7.2%. So with line of credits, the interest rate you receive is typically prime plus 0.5% or 1%, because it's fully open. You're not committing to yourself for that bank for that long. So you could be paying 7.7 or 8.2%. When it's a mortgage, the interest rate on a line of credit is typically, the interest rate on a variable rate mortgage is typically prime minus, and you get some sort of discount. So I also get a lower rate.
Yeah. Okay, so Kevin has a question. Kevin, if you want to unmute yourself.
Oh, hi. Well, but it also, I guess, it also depends on, think about that, like HELOC is only a simple interest, right? But your mortgage is a compound interest. It depends on whether you are on fixed or variable.